We have all been waiting for the cooling of Canada's real estate market. When oil prices took a dive, oil-based areas of Alberta immediately saw a huge correction. Today, we have extraordinary prices in Toronto, Vancouver, and others, and it would seem nearly impossible to stop. Today, we see sales dropping massively, and we anticipate the Bank of Canada reducing liquidity to stop fanning the flames that have made real estate completely unaffordable to many. You came here for the truth. Today we are going to look at real estate prices in Canada, why they have risen so high, and how this is all coming down. Let's look at this. Toronto home sales dropped 40% compared to a year ago. This is the biggest drop since the financial crisis. Now, Canadian real estate saw the sales drop during the financial crisis, but they weren't hit nearly as hard as what happened in the US. It was a little bump in the road and things continued to rise. Why was that? Well, hear me out for just a second and I'll get into that point. Average selling price for all homes in the GTA was $746,000. We're talking about prices that are unaffordable to a large percentage of the population within the GTA. Many people can't afford that unless they go to an alternative mortgage lender who's able to lend them a lot of money, and it will probably not end too well once interest rates rise. Looking at this, we need to realize that it's at levels that are not sustainable. It's okay if prices continue to rise because our wages are continuing to rise. But last time I checked, our wages weren't rising. Let's look at this. Markets have put chances on a rate hike from the Bank of Canada in October at 70%. So just recently, the Bank of Canada increased interest rates a small amount. Should they persist and increase interest rates, this will completely eviscerate the Canadian real estate market. The market, just like every other market, stock market and everything else, runs on debt. It runs on a small percentage of real wealth, and the rest of it is all fictional. Look at how stocks are running off of margin, real estate is running off of basically the banks lending to people, and it's all a matter of pay a small percentage now, pay the rest later. And people do that buying things at, big box stores and everything else. You think you own it, but ultimately the bank or the lender owns it. And so we have this new sort of rental type economy that's existing. Doesn't matter, it's still pushing the prices upward. The problem is that when they come down, they fall very, very hard. And it isn't possible to withstand a significant increase in interest rates without causing a collapse. It's just not possible. It isn't possible because many people are able to buy homes today because of interest rates being historically near low, very lows at this time. When you look at the prices or the interest rates that were in existence for the past, let's say since 1980, you can see that trend declining year after year after year. And that allows people to borrow more and more money. And it gives them no incentive to save because they're figuring, why am I going to put my money in a savings account when I can simply invest that into my home, into something else, and that would be able to basically make a lot more return. And that's the way people have seen it so far. But what happens, just what happens, if prices come down 25, 50%? What are we going to experience? Well, many people would completely be wiped out as a result of that. Many people, in fact. Even if it's just 25% correction, which is extremely possible. Well, that's never going to happen. If you ask the Bank of Canada, they're going to fix it. Don't worry about it. You ask the government, don't worry about it. You ask all these different boards that exist that protect the real estate and try to continue to push the real estate prices higher. They lobby the government. They will tell you that nothing will ever happen. Well, it isn't a bizarre or strange occurrence for there to be crashes. It happens. It happens. Now, it doesn't happen very, very hard in many cases, except when the prices rise too far. That's the way it is. The market will always find its balance. Every market always finds its balance. Even when you try to manipulate it, the price will come down so dramatically downward, and then they can fix it up after and try to bring it back to another level. But it always finds its own balance. That's the way it is. You can print and print and print, but it has that sort of beach ball under the water effect. You push it down, the harder you push down, the harder it's going to push itself back up. That's the way this all works. Just be prepared for interest rates. That is the number one. It is the primary indicator of the Canadian real estate market right now. In the Toronto area, the price of a benchmark detached home has fallen 8% from April's peak. That decline has taken place more quickly than the drop recorded in the Vancouver area market after the BC government introduced the tax. What happened? Well, in Vancouver and BC, they decided to impose a 15% foreign buyers tax. They're saying, look, the foreign buyers are pushing the market up. We'll impose a 15% tax to give them less of an incentive to buy here. So what happened? Well, if you want to know what happened with that, just hang on just a few minutes, okay? They're suggesting that, this is a little bump in the road. Have no fear. Everything is going to be okay yet again. All right, let's look at this. Benchmark prices dropped $37,000. Toronto real estate prices are losing ground and fast. The composite benchmark prices across the TREB fell to $773,000, an 18% increase from the same time last year. It's $37,000 lower than it was last month. So it's a significant number, although the prices have risen dramatically. We need to also remember that it's not at a low level and sinking further. We're talking about it being at the peak. So we have to look at it and time it and realize where exactly is the peak and where is it going? How far is it going? And we need to be observing this. There's more in here about the numbers that it gets into, but essentially I want to note that the prices have risen too far, too fast, and as a result, we always see, every single time, we see crashes coming down much, much faster than they rose up at the first place. Look at this. Toronto average price, the composite here, the average price has risen year over year. This is going back from the end of 2014, and you'll see that, yes, despite the fact that there have been bumps along the way, you look at this. Another point that I want to make is the fact that it has come down significantly in the past few months. That is something that we need to look at. But again, prices had come up, year over year. So a correction along the way is a natural event. Hopefully the prices do correct significantly, and then we can have order that is restored. That's very important. And remember, at this point, essentially none of this has to do with interest rates yet. Nobody's had to refinance with all their interest rates and everything else. So think about that. This has nothing to do with interest rates yet, and yet that is the primary key indicator of what will happen with real estate. Looking at this, next one, Toronto sales versus listings. 2 points that I want to make. We have formed a chasm in between the two numbers here of the new listings and the sales. So the new listings had increased significantly, while also the sales had increased. However, both have dropped. Both have dropped quite a bit here. So we're seeing that as being one of the primary indicators to note that there is a change in the market. We don't know what that means ultimately. At this point, you'll be able to look back a few months down the road and sort of gauge it. However, at this time, we're seeing a little bit of a change that's occurring within the real estate market in Toronto. Vancouver, downturn dash. Now, here's what I wanted to get into. You don't hear this on other channels. I don't know why. You don't hear this on YouTube. You don't hear it in the mainstream media, but I'm going to talk to you about it today. Vancouver downturn dash. So they're talking about the 15% foreign buyers tax that was implemented within BC. That was supposedly to push away all those foreign buyers and get the prices to stop being so heated. And I've covered more about Vancouver. I've covered more about Toronto and how this all works, how they're being pushed up, how the real estate agents are taking people to basically literally knock on doors one after the other in the desired neighborhoods and offer them a significantly higher value than what their home currently is at. And the people walk because they're getting such a significant increase over the current value of their home. That's pushing the prices up. You also have assignments that are taking place that are not very normal. I mean, the assignments are supposed to be small percentages that you would make as a real estate agent, where you can do these, or not even a realtor, but anybody could make small amounts of money on assignments. You'd be able to take that and make some money off that. But now people are making a living just off of assignments. Okay, so this is what's happening, right? 15% buyer's tax. They also did so in Toronto. All right. So think about this for a moment, where you're looking at the real estate prices rising very high. They impose these taxes in these provinces, and you're looking at it from a different angle now. Ontario, BC, both implemented it. So therefore, prices will come down, right? Well, no. And I'll tell you why. Yes, Vancouver's prices came down a little bit. They went back up. What happened? No idea why this isn't being covered and why it's not front page news of the real estate sectors here. A real estate ad has surfaced in Hong Kong promising to cover Ontario's recently implemented foreign buyer's tax and a rent guarantee of up to 1 year for the first 30 buyers of units in a downtown Toronto condo building. The buyers, or the builders, excuse me, the real estate companies, everybody involved in these markets now has an incentive to pay these fees that people are incurring. That's what's going on. This will never come down in the way that they're doing this because somebody is there to foot the bill. Oh, you're going to get taxed? Don't worry, I'll pay that for you. Will you buy the house now? Yes. No problem. They'll continue to sell it. They don't care. But interest rates, that's the key. Nobody can sustain these interest rates because that whole market is running on the fact that interest rates have been historic lows. This will crash when interest rates rise. The trend is going in that direction in the US and in Canada. Let's just say they bring it up to 3%. All of a sudden we have some foreclosures, we have some bank-owned properties happening, we have people that have to basically, their homes become unaffordable. What's going to happen? Well, you will then have a general lagging in the economy as well, because everything about these people's wealth is in their home. They don't have actual wealth. They have debt on their home. They use their homes as a bank and they're pulling the equity out. There's no equity there, so everybody is going to be underwater. Not everybody, but a large percentage of people are going to be underwater when this hits. Interest rates are going to do it. They pull away, they decide to reverse course on interest rates, go right to the bottom again, maybe go negative. The prices become literally unaffordable. I mean, you know, if it's $2-3 million for every home, nobody's buying it. Nobody's buying it, and you will have a very big problem. You have people becoming renters. Nobody's going to be saving money. You're going to have an issue that is impossible to deal with. So eventually it has to break somewhere, and it could be interest rates. Interest rates don't necessarily, you know, they can control it to a certain degree, but they have to print money in order to do so. And that, of course, causes inflation. So they're sort of trapped right now. That's all for this video. I hope that you found it interesting, especially the fact that they're not covering, nowhere seems to be covering the real data, what's going on behind the scenes. So that's why I hope you appreciate the Money GPS very much. If you found it informative, give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. Links are in the description below. In the first book, I get into the 4 asset classes, which includes real estate. I talk about how to profit from these, talk about the 4 different ways that real estate earns you income. People don't know that. And in my new book, I talk about familiar topics, but I also get into things like earning income, tax incentives, reducing your monthly expenses, solar panels on your home, things like this. So definitely check those out at Amazon. Take care.